Gold has really started to, or when gold will start to kick off in that kind of environment, I do think that perhaps not immediately to the same extent, silver will react as well. And it usually does with a lag. It has this industrial side as a bit of an overhang, but it will catch up to gold, and then it will absolutely outpace gold. It has done that multiple times historically. I expect that will happen again this time around. Technically, there's a little bit of perhaps downside both in gold and silver. I don't think those bottoms are very far below where we are now, but the upside is tremendous.
The editor of Silver Stock Investor, PeterKrauth, points out a potentially diminished favorable outlook for silver due to the current economic slowdown. He highlights the historical trend that when the Federal Reserve initiates rate cuts, it typically stimulates the economy during a recession or economic downturn, indicating a challenging environment for silver. Contrary to this cautious view, LBMA analysts express a slightly more upbeat sentiment on silver, anticipating significant volatility in the market throughout the year. The survey indicates that analysts expect silver prices to average around $24.80 an ounce, showing a 6.2% increase from the 2023 average price of $23.35. This average is also 7% above the average in the first month of the new year. While silver has recently climbed to $22.80, outperforming gold's downturn, Krauth acknowledges that silver's price performance has been different from gold in recent years. He notes that as gold gains momentum in response to economic conditions or monetary policy changes, silver tends to follow suit and often outpaces gold, as seen in historical trends. Krauth delves into the evolving dynamics of silver, emphasizing its dual roles in industrial and investment applications. He suggests that the demand from industrial applications has become more predictable, contributing to a steady rise in the industrial usage of silver. Global silver demand is forecasted to reach 1.2 billion ounces in 2024, potentially marking the second highest level recorded. The industrial sector is expected to drive this demand significantly, with a forecasted 4% rise in silver industrial fabrication to a record 690 million ounces. Join us as we delve into insights shared by PeterKrauth. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Silver starts to move, odds are it'll start to move in an environment where very little else is moving. So maybe with precious metals, maybe with Bitcoin to some extent, but all three of them, being viewed as safe havens. So I think that the investment demand will by far sort of outpace any kind of drop in silverware, for example. And I think even younger generations will start to pay attention. They'll look for the assets that are moving, and among those being a safe haven. A bit of sort of mixed feelings, or a couple of points. I'm on the fence a little bit about that, because silver being so much of an industrial metal, the point at which the Fed starts cutting rates is because they're needing to stimulate, because we're either in or at the start of a recession. And so you would expect that will provide a diminished favorable outlook for silver, because the economy will be slowing down, and again, silver being so much of an industrial metal. The other side of that is, as you mentioned, silver being a monetary metal. Gold has really started to, or when gold will start to kick off in that kind of environment, I do think that perhaps not immediately to the same extent, silver will react as well. And it usually does with a lag. It has this industrial side as a bit of an overhang, but it will catch up to gold, and then it will absolutely outpace gold. It has done that multiple times historically. I expect that will happen again this time around. I do think that we're going to start to see that. There was an interesting chart I saw from Krauth going back a year or two, where they looked at the prior bull market, and when gold really took off in sort of the late last decade, 2009, 2010, 2011, you had a bit of a lag, and then M&A absolutely exploded and really caught up. And unfortunately, a lot of bad deals were done, but this was being done with much higher share prices. So they used their currency, their share prices as a currency, to go out and buy all sorts of things. There's a big gap now. That's very much true. I think that it's going to catch up, and I think that actually presents an opportunity. So, we're not quite at it's hard to know. You will only know if we know looking back. Have we seen a bottom yet? It's possible. I think there's a little bit of perhaps downside both in gold and silver. I don't think those bottoms are very far below where we are now, but the upside is tremendous. And I think there'll be a bit of a lag. The M&A will certainly come and catch up in a big way, and probably some bad deals will get done again. Silver has started to act more like an industrial metal. And if you even look just back at 2023 numbers, we're at over 60% now of silver is actually going to industry. And a few years prior, it was only about 50%. So it's becoming gradually more of an industrial metal. The demand from industry is more predictable, and it's just been sort of a steady rise. I like to say that the price of silver is supported by the industrial demand, and it provides sort of a rising floor under the silver price, and that it's actually when investment demand comes back in a big way, kicks in, and that's when that's the wild card that starts to really push silver prices higher. Where we do see a lot of demand, even for silverware, tends to be in India, which is also a big demand market for physical silver as well as silver jewelry. It hasn't been a huge factor, silverware, in terms of the sort of luster or falling demand for it. It's still there, but it's something I believe that we're going to see more and more of, that's going to slowly kind of go away.
In a significant move in July, BlackRock successfully raised $5 billion in a bought deal, signaling a noteworthy transaction within the silver sector. PeterKrauth acknowledges that while such deals can be dilutive, they serve as early indicators of potential trends in the market. BlackRock Silver Corporate successfully completed its previously announced and upsized bought deal public offering, comprising 28,750,000 units at a price of $0.20 per unit, resulting in aggregate gross proceeds of $5,750,000. This accomplishment includes fully exercising the underwriter's over-allotment option, selling an additional 3,750,000 units for $750,000. Krauth foresees an uptick in merger and acquisition (M&A) activities within the silver sector in the coming year. Silver is characterized as a unique commodity, and discovering genuine silver deposits can pose challenges, making strategic transactions like BlackRock's deal noteworthy in shaping the landscape of the silver market. Let's get back to the interview.
A pretty good deal that BlackRock did. They raised $5 billion bought deal. First bought deal in the silver space since something like July. It was at a considerably lower price. So that, is dilutive, obviously, but it's perhaps a good early sign in terms of what will come. And depending on quality of project and so on, some are going to struggle and some will have an easier time raising funds. I think that the better quality ones will always have that ability. And there are several juniors that have either maintained, not fallen nearly as much as the average in their space. Very few names have actually performed very nicely. You have discoveries, you have growing production, for example. Those are obviously less juniors. But as I say, I think that the junior space, the better names always have that window open to them.
Given the tough market conditions, do you expect to see more M&A in the silver space this year?
I do. I think silver is very particular. It's tough to find good, real, true silver deposits. You have a lot of companies out there that have silver in their name. I feel that they just masquerade as silver companies. They're really quoting their silver deposits on a silver equivalent basis. And when you look at the value of the silver in that deposit, it might be 20-25%. The rest might be lead or zinc. They're so rare. The highest quality ones, I think that they're going to be the first targets. It's true that some of the larger potential acquirers are suffering as well, and so their share prices are smaller or less than they ultimately otherwise could be. But at some point, it's just going to be too attractive to avoid and ignore. They'll find ways to make it happen. Either potentially it'll be mergers. Acquisitions will be perhaps a little bit tougher, but we'll see both of those start to happen for sure this year.
The Silver Institute highlights the potential for a new surge in demand for silver from the growing artificial intelligence sector, particularly in consumer electronics, offering additional support to the precious metals industrial applications. Examining the jewelry sector, the Institute anticipates robust growth in India, projecting a 6% increase in jewelry consumption for the year. Considering the potentially diminished outlook for silver amid the current economic slowdown, how do you see the interplay between industrial demand and investment sentiment shaping the future trajectory of silver prices? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.